3, bookkeeping. So what is bookkeeping? Bookkeeping is the process of recording your company's financial transactions into organized accounts on a daily basis. It can also refer to the different recording techniques businesses can use. And it is also record keeping. It is a task in accounting process and also accounting. Accounting is defined as information system that measures, process, and communicates information primarily financial in nature about identifiable entity for the purpose of making economic decisions. So accounting is the process of recording financial transactions pertaining to a business. The financial statement that used in accounting are concise summary of financial transactions over an accounting period, summarizing a company's operation, financial position, and cash flows. So here are the steps in accounting processes. First is analyzing, is looking over transactions entered, examining economic events that have taken place, and determining their effects on the business. Recording, it involves the effects of transactions and events that have been analyzed. Then classifying is the sort of grouping of like transactions and event into specific account titles. Then summarizing is the process that involves grouping together of various accounts referred to in the classifying process. Then reporting involves the preparation of financial summaries called financial statements. And last is interpreting, involves the computation of and the study of relationships of figures from the financial reports. Next. So here is the example of financial statement. So it includes net sales, cost of goods sold, gross profits, rent expense, depreciation expense, salaries expense, utility expense, operating income, interest expense, income tax expense, net income. Then the assets, total assets, liabilities, and stockholder equity. Next. So there are 3 basic financial reports. So balance sheet shows the assets, liabilities, and owner's equity or owner's share in the business as of a specific date. So as you can see, here is the balance sheet example. So balance sheet example includes the current assets, property and equipment, other assets, and the other is liabilities and shareholders equity, total liabilities, shareholders equity, and so on. So in the balance sheet example, dapat balance din yung total assets and total liabilities and shareholders equity. So that is the basic financial reports, 3 basic financial reports. Next.
Hi, my name is Denso Chavez, and I will be the second reporter for bookkeeping. So the next step, the second basic financial report is the income statement. So it shows the sales or service income and the costs and expenses of the business for a period of time. So the period of time covered in this example is for year ended September 28, 2019 in thousands. So the gross profit in this example is 1,619 and 386. Then the operating income is equal to 765,227. Since it is not yet taxed, the operating income before taxes resulted to 740,874. Therefore, deducting the income tax expense, the net income for the company B income statement resulted to 483,232. So next, after balance sheet and income statement, there is also the cash flow statement. So shows where the cash came from and where the cash went to for a period of time. So, for the period in time here in this example, it started from 2015. So this is in millions. So in 2015, for example, the cash and cash equivalents end of period is equal to 15,890 million, which is lesser compared to 2017, which increased to 20,522 in million. So this is the cash flow. So from net income, starting income, then this includes the investing activities, financing activities. So this is what a cash flow statement looks like. So we're done with 3 basic financial reports. Then next is we have these so-called assets. So assets are resources owned by the business. They are cash on hand, cash in bank, accounts receivable, notes receivable, inventories, unused supplies, prepayments, land, building, and equipment. Next is liabilities. Compared to assets, which are the resources, liabilities are the payable to third parties. So they may be accounts payable, notes payable, expenses payable, and mortgage payable. Then we have also the owner's equity. It is the share of the owner. So it consists of owner's investment plus profit or minus accumulated losses and withdrawals retained in the business. So the owner's equity formula is equal to assets minus liabilities. So a clear example for these three is shown in the balance statement, a balance sheet. So we can see here the total assets, the total liabilities, and the shareholders' equity. One.
So for the continuation of the report of Mr. Chavez, this is the continuation. Sales and service income are the revenues or gross income from sales of company goods and services. So for the sales it is action of selling something. So for the service income it is income earned by the providing technical consulting or other professional service as part of their trade. Next. The next one is cost of sales or cost of services are the direct cost of the product sold or the service rendered. For the cost of sales, it is referred to the direct cost of producing goods sold by a company. So for example, uh, raw materials, item purchase returns and allowances, and Cost of services, all direct costs associated with service renders. For example, cost of train, cost of bus, cost of plane ticket. Next, Jobs. This is example of expenses. For the salary expense, salary for service rendered by employees. Utility expense, telephone, water, electricity use. Rent expense, rental for the use of equipment, office, building, and land spaces owned by the others. Supplies expense, office supplies, selling supplies, and factory supplies use. Transportation expense, fare for trips and travels, cost of gasoline and oil used for company vehicles. Representation expense, amount paid for it to the restaurants, hotels, and the like for eating out with customers and others. Depreciation expense, that portion of the cost of building, vehicles, and the equipment that is allocated as expense for accounting period. Interest expense, interest of debts or money borrowed. Next. So this is the example of steps in accounting cycle. Journalizing, journalize the economic transaction and events. Posting, post to the general ledger the journal entries in number 1. Trial balance, prepare the trial balance from the general ledger. Adjusting, adjust the ledger balances. Financial statements, make income statement and balance sheet from the adjusted trial balance. Closing, close of transfer the income and expense accounts to income and expense summary account and the latter account to owner's equity. Post-closing trial balance, make a trial balance of all assets, liabilities, and owners' equity accounts after having closed the income and expense accounts. Reversing, reverse some adjusting entries to prepare them for a new accounting period. Next. So for further knowledge about accounting cycle, this is the process which involved accounting cycle. Source of documents. In the source of documents, it involved official receipts, sales invoices, purchase invoices, cash vouchers, other sources. And step 1, book original entry. So this includes general journal, special journals, and the second one is book of final entries. And the next is general ledgers, worksheet. The worksheets involve accounting titles, trial balance, adjustment, adjusted trial balance, income statement, balance sheets. After worksheet, income statement, and the next one is statement of owner's equity, and the seventh one is balance sheet. After the balance sheet, general journal closing entries. After general closing entries, general ledgers, and the final one is the post-closing trial balance. So that's this is the final report of our bookkeeping